Howdy folks, happy midsummer yet again. This is Jeff Camarda, this time with the investment philosophy of Camarda's Caesar portfolio, or Caesar stock portfolio. And I'll begin again with the executive summary, just the really important stuff. If you get a little bit bored by the long-winded nature of the balance of the video, feel free to just click it off and you really won't have missed very much. I'm going to go into the key points and then an expansion of each point later on in the video. So to begin with the executive summary, the Caesar is a Camarda-exclusive individual stock strategy. We invented it, we run it, you can't get it anywhere else. It's not a mutual fund or investment product. The stocks are held directly in client accounts, in your accounts. Stocks are selected and monitored by the Camarda Portfolio Board based on a proprietary research that we conduct and we collect from others, and it targets high-quality stocks with attractive dividends that are trading at a discount to what we feel their real value is. Now, it's important to view stock investment as ownership of a company, not just a piece of paper like a baseball card. And you've invested in a business, you're an owner of the business, you deserve to get paid commensurate, we know, with the success and the risk of the business. So look at it that way, and I think it really may change your perspective. But we look for strong, regular dividend cash flow to clients. So we get paid to wait for stocks to appreciate. And it's important to realize the total return is the dividend cash flow plus the expected higher eventual sales price. That comprises the total return. And you really should be, as a Caesar investor, a patient investor owner. You watch your share of the profits cash flow in while you wait to consider a sale when the price is right down the road. We target better than bonds income and big payoffs down the road as the stocks hopefully are appreciated by the market at the value that we consider fair. So Caesar, of course, is named for the eponymous, which just means by the same name, named for the Roman general and later emperor, is an individual stock strategy designed by myself, Dr. Camarda, and run by the Camarda Portfolio Board. It's available exclusively to Camarda clients. It's not a mutual fund or investment product that's managed by an outside company. It uses individual stocks that are picked and overseen by the Camarda Board, which are placed directly in clients' individual accounts, not in a fund. In your account, you'll have so many shares of each stock. Each client owns their shares of the Caesar stocks directly in your own client name. The stocks are picked and monitored based on proprietary Camarda research and research that's collected from others. The Caesar strategy targets stocks of companies that we believe to have very solid businesses with strong outlooks. We look for very attractive investor cash flow, stocks that pay strong dividends regularly and directly to client accounts. You can have those paid directly to you if you wish, or reinvest it. Most importantly, we look for stocks that represent very good value. We look to buy pieces of companies at really good deal prices because we believe that if we buy quality cheap, there is a much better chance of outperforming the general market over time. You know, it's always confounded me that stocks seem to be the one thing that people don't naturally want to buy and sell. Gee whiz, the price is down, it must be bad. That's a good time to buy, it's on sale. The overarching principle is acquiring companies we believe to have high quality, profitable businesses operating in good industries that have attractive prospects. We generally look for individual stocks paying dividends of 3% or more and look for an average portfolio yield of over 5%. Sometimes well over that. It's important to note that this dividend yield is not the total return expected. They are the investor's share of company profits paid out to them as owners of the company. We expect to make more, hopefully much more, by eventually selling the shares for higher prices than we buy them for. But it's very nice and profitable to get paid to hold the shares while we wait, and it often takes a few years for the value we seek to be captured. Now, real estate investing offers a very good analogy. After soaring to crazy prices from 2004 to 2008, the Las Vegas real estate market went way down, and houses were selling for much less than they were worth. From 2010 to 2014, the Vegas market went up over 60%, and patient value investors who bought cheap were well rewarded for waiting. In the meanwhile, they got paid to wait by renting the houses out. The houses have not changed. Trend chasers got killed on the run-up in Vegas, but bargain hunters made out like bandits. the buy price really matters. Value investing in stocks is like that. It can take a while to capture the value, sometimes years, just like Vegas, just like the Vegas houses. But in the meantime, the stocks can go up or down based on news or popularity, but we consider that just noise. It's kind of just random fluctuation, just short-term fluctuations in a long-term trajectory. Camarda believes that having a Buffett mindset, looking at your stocks as an owner of a company, not a holder of a piece of paper or a trading card or some speculative thing or a lottery ticket, but rather thinking as an owner of the company and watching a share of the profits cash flow in as you wait for the market to appreciate the value of the company you own, should you consider a sale, is a great and smart way to be an effective investor. Hopefully you found that useful. Sorry if it went on too long, but I think it's really, really important stuff for Caesar investors to know about and to remember. And until next time, thanks so much for watching. This is Jeff Camarda.